What is happening, crypto fans, and welcome back to Bitcoin Bulletin. The market is absolutely electric right now, with news dropping faster than you can blink. We've got major players making bold moves, long-term strategies unfolding, and predictions that could redefine the entire landscape. Are you ready to dive into the updates that matter? Because we've got a packed show for you today that you absolutely cannot afford to miss. Stick around, because this is where the action is. First up, we're dissecting the subtle yet powerful shifts happening with Bitcoin's most seasoned investors. Are they cashing out, consolidating, or setting the stage for the next big surge? We're digging into the data that reveals their game plan and what it means for the market. Then, we're turning our attention to a titan of the investment world who is doubling down on an absolutely audacious prediction for Bitcoin's future. Despite the timeline shifts, his conviction remains unshaken. What's driving this unwavering belief, and could he be right? You won't want to miss this deep dive. Next, we're exploring a monumental development that could be the ultimate tipping point for widespread adoption. We're talking about institutional investment in a key digital asset that's seeing unprecedented inflows, signaling a new era. Finally, we're analyzing a fascinating trend where capital appears to be rotating out of one major cryptocurrency and into another, with major institutions leading the charge. What's behind this strategic pivot, and what does it mean for your portfolio? Get ready for all the insights, right here on Bitcoin Bulletin. Don't forget to smash that like button, subscribe for all the latest, and ring that notification bell so you never miss an update. Long-term holders shift strategy, Bitcoin's market power redefined. This development is crucial as it signals a potential maturation of the Bitcoin market, impacting its volatility and adoption trajectory. Bitcoin's long-term holders, the bedrock of its stability, are currently making significant moves that are subtly but powerfully reshaping the market dynamics. On-chain data and expert analysis suggest that we are entering a late bull phase, characterized by a remarkable $1 trillion plus realized capitalization and a noticeable decrease in short-term trading activity. This indicates that a substantial portion of Bitcoin's supply is held by investors with a long-term vision, who are now beginning to strategically take profits. The 7-day moving average of Bitcoin's spent volume has dipped to 545,000 BTC daily, a figure considerably lower than the 900,000 to 1 million BTC seen during peak distribution periods. According to analyst Axel Adler, this reduction in selling pressure from long-term holders is a positive sign, suggesting that the market may be stabilizing. If daily volumes can remain below 500,000 BTC, it could pave the way for a sustained uptrend. However, the market is not without its complexities. Prominent analyst Willy Woo points to a phenomenon involving early whales, investors who accumulated Bitcoin during the 2011 bull run at exceptionally low prices. These early adopters, holding vast unrealized gains, are now actively liquidating portions of their holdings. This strategic selling requires substantial capital inflows, reportedly over $110,000 per BTC, to absorb the selling pressure and prevent price declines. This dynamic is acting as a brake on Bitcoin's upward momentum, as the market must continuously absorb these large-scale profit-taking actions without triggering significant price drops. The fluidity of these early whale movements is particularly evident in recent transactions. One such whale, who amassed 100,784 BTC in 2016, valued at over $11 billion as of late August, has reportedly been executing a significant pivot towards Ethereum. This investor allegedly deposited $2.59 billion worth of Bitcoin into Hyperliquid for sale, subsequently purchasing $2.22 billion in Ethereum and initiating a $577 million long position in ETH. This strategic reallocation suggests a belief in Ethereum's greater potential for returns. Weekend market activity has also been a focal point, with thinner liquidity and increased short-term profit-taking leading to heightened volatility. CryptoQuant data indicates a rise in BTC exchange reserves during weekends, often accompanied by increased sell pressure and cascading liquidations in derivatives markets due to excessive long positioning. This creates what is described as a liquidity trap, where large market participants can exploit these conditions to trigger stop-loss orders and induce sharp price declines. Despite these short-term challenges, the overall sentiment among analysts remains cautiously optimistic. The current market phase is described as Stage 4, indicative of a late bull cycle with high unrealized profits, but without the extreme euphoria typically seen at market peaks. Historical data suggests that August and September can be periods of increased volatility, and a temporary pullback toward the $100,000 mark is a possibility as the market recalibrates. Nevertheless, persistent bullish indicators, such as the low spent volume and the steady behavior of long-term holders, suggest that Bitcoin's upward potential remains strong in the longer term. But what if this shift in long-term holder behavior is just the beginning of a much larger trend? Next, we'll explore a bold prediction from a venture capital legend that's defying all expectations. Venture capitalist doubled down. $250,000 Bitcoin prediction stands. This forecast, if realized, would represent an exponential leap for Bitcoin and a significant validation for early crypto adopters. Venture capitalist Tim Draper has once again reaffirmed his incredibly bullish outlook on Bitcoin, standing firm on his ambitious prediction that the cryptocurrency will reach $250,000. While the original timeline he set forth in 2018, within 4 years, has passed, and Bitcoin experienced a significant downturn in 2022, dipping to around $16,000, Draper remains undeterred. In a recent interview, he acknowledged the missed deadline with a chuckle, noting that even reaching half his target, near the $111,000 mark, is already a remarkable achievement. His confidence is rooted in his perception of Bitcoin as a dual-purpose asset, a crucial financial hedge against global economic instability and a foundational technological platform. Draper argues that escalating global debt, persistent inflation, and governmental mismanagement only serve to amplify the appeal of decentralized currencies like Bitcoin. This is still the right time to hold Bitcoin, he stated, highlighting its resilience and its growing importance as a store of value compared to traditional financial instruments. Draper frequently draws parallels between Bitcoin's burgeoning dominance and the establishment of an operating system in the tech industry. He views Bitcoin as the fundamental layer upon which a vast ecosystem of innovative applications and services is being constructed. As the cryptocurrency space continues to expand and mature, Draper firmly believes that Bitcoin's central role will inevitably attract greater adoption and capital investment. Despite some critics pointing to his shifting timelines as a potential blow to the credibility of his forecast, Draper's past predictions cannot be easily dismissed. Notably, his 2014 call for Bitcoin to surpass $10,000 within 3 years, a prediction widely considered outlandish at the time, eventually proved accurate. With Bitcoin having already shattered previous all-time highs in 2025, Draper's $250,000 target, while still distant, is increasingly viewed as plausible rather than purely speculative. The ongoing debate is shifting from whether Draper will be proven wrong to whether the market will provide him with sufficient time to be proven right. Adding context to Draper's conviction, recent market data shows Bitcoin has spent an extraordinary 273 consecutive days with a supermajority of its supply held in profit, exceeding the +1 standard deviation profit band. This sustained period of profitability, even amidst price consolidation, underscores the strong holding conviction of many investors. Furthermore, emerging patterns suggest a potential correlation between Chinese equities and Bitcoin, a trend observed in previous market cycles, according to Bloomberg Intelligence analyst Jamie Coutts. Simultaneously, analysis from AltCoinVector indicates that Ethereum might be forging its own independent momentum, diverging from Bitcoin's price action for the first time in this cycle. These broader market trends, while complex, contribute to the evolving landscape in which Draper's long-term predictions are being made. Could these institutional shifts and bold predictions signal a fundamental reevaluation of digital asset dominance? Get ready for a story that might just be the ultimate catalyst for mainstream crypto adoption. Institutional Bitcoin ETF surge, a tipping point for mainstream adoption. The approval and subsequent inflows into Bitcoin ETFs mark a significant milestone, potentially accelerating cryptocurrency's integration into traditional finance. The landscape of cryptocurrency investment is undergoing a seismic shift, largely driven by the burgeoning success of Bitcoin exchange-traded funds, ETFs. These financial instruments, designed to offer investors exposure to Bitcoin without the complexities of direct ownership, have seen unprecedented demand since their introduction. This surge in institutional interest represents a critical juncture, signaling a potential tipping point for the mainstream adoption of digital assets. The approval of these ETFs by regulatory bodies has effectively opened the floodgates for traditional capital to enter the crypto market, a move previously fraught with regulatory hurdles and accessibility challenges. Analysts point to several key factors fueling this ETF boom. Firstly, the regulated nature of ETFs provides a layer of familiarity and trust for institutional investors, including pension funds, asset managers, and hedge funds who operate under strict compliance frameworks. This regulatory clarity has demystified Bitcoin investment, making it a more palatable option for a wider array of investors. Secondly, the convenience of investing in Bitcoin through established brokerage accounts and traditional financial platforms significantly lowers the barrier to entry. Investors can now allocate capital to Bitcoin within their existing investment portfolios, leveraging familiar processes and infrastructure. The impact of these inflows is palpable across the market. Significant capital has been deployed into Bitcoin ETFs, driving up demand and contributing to price appreciation. This sustained institutional buying pressure is seen as a stabilizing force, potentially reducing the volatility often associated with cryptocurrencies. Furthermore, the success of Bitcoin ETFs is laying the groundwork for similar products based on other digital assets, potentially broadening the scope of institutional involvement in the crypto space. Public reaction has been overwhelmingly positive, with many viewing the ETF approvals as a validation of Bitcoin's legitimacy as an asset class. Financial commentators and industry leaders have lauded the development as a crucial step towards integrating digital currencies into the global financial system. While some remain cautious about the potential for increased market correlation with traditional assets, the overall sentiment is that this development marks a significant advancement in the maturation of the cryptocurrency market. The long-term implications include greater liquidity, enhanced price discovery, and a more robust regulatory environment, all of which are conducive to broader adoption and sustained growth. This wave of institutional adoption isn't limited to just one digital asset, however. Prepare for a deep dive into how capital is shifting and why Ethereum might be the next big institutional play. Ethereum outshines Bitcoin. Institutions pivot to ETH amidst ETF frenzy. This significant capital rotation suggests a potential shift in institutional preference, highlighting Ethereum's unique utility and yield-generating capabilities. Ethereum, ETH, is currently exhibiting a powerful performance surge, notably outperforming Bitcoin, BTC, and reaching new all-time highs above $4,860. This impressive rally is being fueled by robust institutional buying activity and substantial inflows into Ethereum ETFs, signaling a growing conviction in the long-term value proposition of the second-largest cryptocurrency. The trend indicates a potential strategic pivot by major institutions, with capital visibly rotating from Bitcoin towards Ethereum. Key institutional players are leading this accumulation. Bitmine Immersion Technologies, recognized as the largest corporate holder of ETH, has significantly expanded its treasury. In a single recent transaction, Bitmine acquired an additional $21.28 million worth of ETH, bringing its total holdings to an impressive 1.72 million ETH, currently valued at $7.65 billion. This aggressive accumulation strategy by Bitmine mirrors a broader trend among institutional investors. BlackRock, a leading asset management firm, has reportedly been increasing its ETH reserves at a pace 15 times faster than its Bitcoin purchases over the last 30 days. Collectively, corporate holdings of Ethereum saw a remarkable 127% increase in July, reaching 2.7 million ETH, equivalent to $11.6 billion. The shift in capital allocation is further evidenced by on-chain data, which reveals large holders, often referred to as whales, actively selling Bitcoin to acquire Ethereum. This strategic reallocation is closely tied to the growing success of Ethereum ETFs. In a single day, these ETFs attracted net inflows totaling $287.6 million, pushing their total assets under management past $12.1 billion. Concurrently, Bitcoin ETFs have experienced outflows, reinforcing the narrative of capital moving from Bitcoin to Ethereum-based investment products. Several fundamental factors differentiate Ethereum and drive this institutional preference. Unlike Bitcoin, which is primarily recognized as a digital store of value, Ethereum offers enhanced utility through its smart contract capabilities and the potential for yield generation via staking. This dual appeal, both capital appreciation and passive income, makes ETH particularly attractive to a diverse range of investors. Furthermore, Ethereum's integral role in the rapidly expanding decentralized finance, DeFi sector, and its increasing application in tokenizing real-world assets, RWAs, are contributing to its growing adoption. On-chain analytics indicate that in recent days, over $2 billion worth of Bitcoin has been converted into Ethereum by large holders, underscoring this trend. Despite the bullish momentum, analysts caution that the market faces potential risks. Ethereum's leverage-driven pump indicator has signaled multiple times recently, suggesting that a portion of its price gains may be attributed to speculative activity within the derivatives market. This raises concerns about heightened volatility and the possibility of significant corrections if leveraged positions are liquidated. However, the underlying fundamentals of Ethereum remain strong, supported by consistent institutional buying, declining exchange balances, and robust interest in its ecosystem. The ability of Ethereum to maintain its upward trajectory will hinge on its capacity to defend key support levels, particularly the $4,700 mark. Holding this level would solidify the bullish case, potentially paving the way for further price discovery beyond $5,000. Given the ongoing institutional capital rotation and the increasing traction of Ethereum ETFs, the market appears poised for a phase where Ethereum could play a pivotal role in the broader cryptocurrency rally. So, we've seen long-term holders make strategic plays, bold predictions reaffirmed, and a clear institutional pivot towards Ethereum. What does it all mean for the future? Let's recap the biggest stories and what you need to know moving forward. All right, everyone, what a packed episode. We've seen Bitcoin's long-term holders making strategic moves, signaling a late bull phase. Tim Draper is doubling down on his $250,000 Bitcoin prediction, showing unwavering conviction. The institutional Bitcoin ETF surge is truly a tipping point for mainstream adoption, and in a major shift, institutions are betting big on Ethereum's future, not just Bitcoin's. Don't miss out on any of these critical updates. Hit that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and ring that notification bell so you're always the first to know. Plus, let us know your thoughts on these stories in the comments below, and follow us on all our social media channels for even more exclusive content.